Hey everyone, it's Jen Fontanilla, your money coach, and I'm committed to helping entrepreneurial women take control of their money so they gain clarity, hope, and confidence to live out their true passion and purpose. So I wanted to address the issues with COVID-19, the coronavirus, and how it is affecting our financial decisions, especially when it comes to investing and your portfolio. I'm seeing a lot of stuff out there and in regards to money and advice, and I feel like I needed to put on back my old financial advisor hat. So as you know, I am a financial and money coach. I was a financial advisor for over 10 years, and I'm in a different capacity, but yet the information is still true and the same, and is still very applicable to today. So right now we've been seeing oil prices and stocks plummet. We've seen how it's affected travel. Factories across China have closed. Manufacturing, deliveries are halted. You're just seeing it everywhere, right? Even small businesses are taking a huge hit. Even the speaking industry is taking a hit. Everyone is having to adjust to this. And so when markets drop, it's completely human to be afraid and panic and be scared. And those are just human emotions. But I also want to remind you that we've also seen two recent crashes. The first one being in 2000, which is Y2K, the dot-com bubble. I remember that era. And then we had the last one, which was 2008, 2009, the housing bubble crash. And then the deregulation in the financial industry. That was the last one. And so, ironically, last week marked the 11th year anniversary of the bottom of the bear market, which was during the financial collapse in 2008 and 2009. And the Dow Jones bottomed out at 6,517. And now here we are, but now we have, the virus here, and now we are also faced with another market decline. But two, like all significant market declines, this will pass. And the markets will recover, and the strongest market recoveries tend to happen, they follow afterwards. So what does that mean? That there's hope, that this isn't something we haven't seen before. This isn't something that we haven't experienced. And of course, when you put yourselves back in that time, it felt like Armageddon, or the sky is falling. And I've talked about this extensively, where we see a lot of things in the news. We see fear. You know what? It sells. A lot of times when there's not necessarily a decline, but when everything's going great, it's just like, it's so boring to report like nothing's changed or everything's fine, but there are many times in the news when certain headlines, it just gets attention. So I want you to keep that in mind as well, and so be careful when you're watching all this stuff. It's like it's easy to give into the fear of what's happening. And then the most extreme drop, which was during the 2008 crash, actually the 2001. It took about 8 years for the S&P 500 to recover, and then another 6 years after it was followed by the crash of 2008. So 8 years to recover from the first one, and then after it recovered, and then we crashed, then it was another 6 years. In fact, there's this up and down, And I remember there was a couple they were my clients, and it was fall of 2008. And luckily I didn't have too many people panicking, because every time I worked with somebody when I was an advisor, I told them, okay, this is long-term investing. Let's remember the philosophies. Let's remember why we're doing this. I'm going to do my best to steer you in the right direction. And so I get this call from the husband, and he says, okay, Jen, I know you've seen what's going on. And I'm like, yes. And I was waiting for it, and I just remained calm. And he said, what are we doing? Do we do anything? And I said, okay, do you remember what we talked about? Do you remember what our goals were? Do you remember that you're not retiring anytime soon? And he's like, yeah. I said, listen, this is what I want you to do. And we paused. And I said, I don't want you to do anything. I want you to stay the course. And of course, I could hear the nervousness in his voice. And he said, okay, all right, I trust you. And I'm like, okay, it's going to be fine. And so that had happened. And so and in fact, like I mentioned, this client had lost 6 figures in the portfolio, and it was all about, here's the thing with investing and being an advisor and having that role in somebody's life, it's really not so much about the numbers. Numbers are important and the numbers are there, but a lot of times I really believe this is about behavioral management. This is about controlling the investor's expectations. In fact, in the beginning when he had started investing with me, he would check all the time and he's like, oh my gosh, my portfolio went up. Okay, it went down. I mean, he was looking at it every day and I said, you need to stop. You're driving yourself crazy. And he did. So I'm happy to say, you know, I actually got an update from about them recently, a few weeks ago. Then they somewhat retired, but they're doing amazing. And it's just so nice to see that they didn't, and I'll talk about this in a few minutes. They didn't lock in their losses like so many people had. They sold, they panicked, they gave into the fear, they cashed out, you know, their investments, and then they locked in their gains, and that's like one of the worst things you could do. So like I said, that, you know, they recovered from that crash. But you know, with the people that panicked, what happens is they're told like, okay, you know, sell, and like, you know, okay, you know, you don't have to go through this market decline. And it's like, we're not trying to, I really advise, you know, be careful of that. You know, you want to remain calm. And so one of the things I want to talk about is paper loss versus real loss. So of course, when you're invested in equities, like, you know, your 401k plan, depending on what kind of investments are in it, or even your retirement accounts, you're going to have paper loss where you're going to see a decline. You're going to see it go up and down, right? But that's a paper loss, meaning those those losses, they're not realized because you haven't sold anything for real. It's just the market going up and down responding. But when at that moment you decide, you know, I'm out, I can't handle this, I'm going to sell, then it becomes a real loss. The first one is just on paper, but until you literally sell it, then that's when the losses become real. And when it becomes real, that's it. Like, you really are locking in that loss. So there's a difference when it's just on paper versus you really acting and selling it. So historically, investors who have been able to avoid selling during drops have been rewarded by the market over the long haul. And when you look at any chart, you might have seen like those charts where it's like these little lines going up and down. Those are like the ups and downs of the market. It's always constantly happening, the drops. And there's going to be bigger ones, like when you see the market crashes. But overall, when you look at it on a long-term scale over the decades, it's going up. And so you have to make sure that you're not just looking at things microscopically and saying like, oh, you know, it's going to fall. It's like, it's always up, rising and falling. It's that's the way it is. But when you keep in mind your long-term investing plan and your goal, and you hang in there, you will be rewarded. So here's the thing about investing. And like I mentioned, it's psychological. It's about behavioral management, and there's a lot of human behavior and emotions that go behind it. So here's the couple points that I want to leave you with. So the first one is to make sure you're diversified. So whether you need to visit with your rep, your agent, your advisor, I think it's good to revisit your portfolio. What's in it? Are you diversified? You know, what are you invested in? Are there domestic? Are there international, you know, companies in there? Are you diversified amongst different industries? Those types of things. And just revisit your investment philosophy. I was trying to say those two words at the same time. And your plan. I think it's good to revisit, especially if you're somebody that hasn't talked to them in a long time. Revisit that and find out, you know, are we still on track? The second one, I did just say it. So your investment philosophy, why can't I say this? Philosophy and plan. That's your second one. So the first one is make sure you're diversified. The third one is actually my favorite one. It's don't do a dang thing. In fact, we are our worst enemy. There was a study by Dalbar. I'm going to keep this one simple. So the S&P 500 typically earns 10% rate of return. The average investor earns about 4%. So here's 10, here's 4. And what is that disparity? That disparity is the behavioral gap. That's what the investor is doing. You had the potential to earn 10, but because of your investment behavior or lack thereof discipline, you're only earning 4. And why is that happening? Because you're going in and out of the market. You say things like, well, oh my gosh, it's going down, I'm going to sell. Okay, in fact, I'll tell you a story I had, this was years ago. My mom's friend wanted some advice. And this is around the housing market scenario, right? To give you some perspective during what time this had happened. And I'm explaining things to her, I'm answering her questions, and I'm thinking, like, okay, great. I'm hoping she does the right thing. At the end of the conversation, I will never forget what she said. She said, okay, well, thanks. I said, so what would you like to do now? And she said, well, I'm just going to wait for the market to get better, and then I'll invest. And I was just like, oh my gosh, did you not listen to anything I just said? You can't time. There is no such a thing as market timing. And that's, in fact, what she's essentially saying to me is that I'm going to wait till the market gets high and expensive, and then I'm going to go in and buy it. If there was a sale at the store, you buy it when it's on sale, right? Unless there was something that you really, really needed. When things are on sale, that's when you go buy it. Not when it's being sold at a premium, but that was like the issue. And I think people forget. You always hear like, oh, buy low, sell high. But the problem is people are doing the opposite. So don't market time. Don't try it. Nobody has a crystal ball. Nobody knows what's going to happen. And so the fifth one is don't watch the market unless it is your job. And like I told you earlier, when I said this to my former client, I said, you need to stop watching it because it was driving him crazy. He's watching every little price movement and he was just like, oh my gosh, it went up, it went down. And I'm like, this is a long-term thing. Why are you looking at it microscopically? You're driving yourself nuts. So make sure you don't do that to yourself. And so those are my final thoughts are, we have no control over uncertainty. But the one thing that we can control is how we respond to it. And, this isn't about reacting to fear or, looking at collapsing markets and, oh my goodness, I got to do something about this and move all into cash and lock in my losses and all kinds of things like that. Because then what are you going to do? Jump back in? And when are you going to know when to do it? It's too late by the time you figured it out. It doesn't work like that. You'll end up hurting yourself. And, this isn't about what am I going to do in the next 20 minutes, the next 20 days. It's about the next 20 years. And so, finally, I want you to remember that prudent investors beat out those who want to market time and panic. So if you have any questions, I hope this encourages you. I want you to be encouraged that this is something that you need to remember to remain calm. So remember to wash your hands, don't touch your face, stay calm, and stay the course. If you like the video, make sure you give me a thumbs up. If you have any comments or questions, make sure to do that below or send me a message. And with that, please stay safe, stay healthy, take care of yourselves and your families, and all that good stuff that you're hearing. But I think it's also important to mention that I think during this time with everything that's happening, I think it's important to remember for each other to remember to be kind and compassionate because there's a lot of crazy stuff that's happening out there. So thanks so much. All right. Until next time, take care.